Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So on Friday we've got this surprising action that was mostly triggered by really poor PMI numbers and some other statistics that you probably know about it. So in general, by looking at the daily chart, this is not a surprise, because last weekend we actually started discussing of this pattern and setting this OP target, suggesting that, well, actually based on the performance that we saw on the intraday charts right there, this market has destroyed few bearish patterns and actually destroyed totally bearish context that potentially could happen if market will keep dropping down. But since this hasn't happened, that has made us, and context actually has changed. Daily trend has turned bullish here, and market has destroyed the last actually chance for the bears to proceed lower, and that has made us to take a look at another scenario with the bullish setup. And we have set this OP target. The other story is that it was absolutely unclear how market could reach this target so fast as it has happened on Friday. So today in the vehicle report we have considered, as we promised yesterday, the economical background of the current situation in the United States. And this is particularly important for a current understanding what's going on in the gold market as on the other markets. The problem is that reality absolutely doesn't find a way in the numbers that we see: the gross domestic product, in the payrolls, unemployment, inflation. The official statistics shows that everything stands really good, and that makes us think that definitely the Fed, the United States Treasury, will follow the official numbers, and they will provide comments according to official numbers, but not what we see in some secondary indicators that could show the real deal in the economy. So that makes us think that, together with the inflationary expectations that we have considered yesterday, in the nearest time, gold still remain under pressure. So we have to be really careful and stand caution on suggestion of the really cloudless upward continuation on the gold market. Yes, gold shows great performance, and actually this is our major scenario for 2024, that gold should keep going higher. So let's keep fingers crossed that gold will keep going higher. But at the same time, we should understand that this fundamental background makes the constant bearish pressure headwind for the gold, while this kind of action is mostly temporal, is a reaction on some numbers, and it might be not a really very long term, so it might be for a short term performance. At the same time, gold shows great resistance to the headwinds. So based on all the stuff that stands around, in other times, gold probably would show significant drop. But here's absolutely different thing. Also, some positivity could come from factors that hardly could be controlled or forecasted, such as geopolitical events, some unexpected decisions from the political leaders, and so on. So that's why we suggest that, despite of the fundamental pressure on the gold market, gold could really diminish this bearish pressure and compensate it by acting with some other factors. We will see. So returning back to our setup that we have on the daily chart. Currently, with this recent performance, which was really strong, the market mostly has completed the OP, we should consider a few things. First of all, this upward action, strong action, suggests that market could keep going higher. And now on the upside targets, it seems that we have to consider 21, 70, 21, 22 area, which is also a weekly target. But at the same time, you could see that market right now stands at the overbought on the daily chart. And achieving of this target hardly will happen this week. It's probably this is the term for few weeks of action in the gold market. On the next week, we have to be focused first on reaction market on this target, which is the primary, or better to say first step in our trading plan. Second, instead of this target, I would consider some area around 21 as previous top stance right here. This market could keep climbing and starting to form some kind of the wash and rinse around it. It's probably more are related to reality rather than far extended targets for now. So that's what we have on the daily. On the 4-hour time frame charts, take a look. You could see how acceleration stands. Our minor head and shoulders is working nice. Market already has exceeded the OP, and that's why we have to consider 21 area, which is the XOP. It seems that we should forget about these larger head and shoulders because we have straightforward upward action. So XOP stands at 2097. OP on daily stands around 21 even. So there actually stands in the same area. That's why our first step in trading plan, watching for reaching of the XOP target and touching of the 21 area. Also be prepared for some volatility and wash and rinse around this area because this is local top, as I said right there. So market could start grabbing stops. Upward action might be triggered slightly higher because of the stop triggering. So be prepared for volatility around it. But this is our first point to watch for. Our second stage in our trading plan is the wait for a pullback. Because when the market hits the XOP and OP on the daily, we first will get Gartley steeple to sell, despite it's rather strong, but still this is the bearish pattern, and suggest at least minor pullback. Second, it will be accompanied with a daily overbought, which also suggests some downside reaction. Usually this is 1/3 of the upward action. So some retracement back to supposedly 2050 area is very probable. It might happen. Actually, we have here two confluence areas. When the market will climb slightly higher, these levels also will be slightly higher. So that's why this is the level that you see around 2043, 2048. In reality, it will be somewhere around 2055 in the place of this confluence approximately. And this is, you can see, natural support resistance area as well. So retracement here back to this area might be really reasonable. And then we will make the decision on a possible long entry for another time. For the bears, our comments mostly stands the same. Since the bearish position contradicts to our major trend direction, which is up, and we're mostly dealing with the daily intraday, daily fallout time frame chart, we are not considering the taking the short position in our updates and daily videos. This stance is up to you, but it is not forbidden, and actually this might show really nice performance. The only thing that we would like to ask you is that to wait when the target will be reached, and then before taking any position, wait for a clear bearish pattern to be formed here, right in the top. If you will get it, theoretically you could try, but this observation of these patterns and trading on the downside against the major trend stance actually beyond the scope of our videos and our updates. I will tell you more that those of you who are familiar with the Jordan-Napoli framework, you probably could see that here we will get the setup for a Kibi trade. We have the ABCD extension target in a company with the overbought. This is some kind of the stretch combination, but it is formed not by the fib level, but by the extension. So that's actually what we have currently on the gold. Let's keep watching and see what will happen next week.